The moment we have been waiting for all year has finally arrived. The Federal Reserve cut rates by 25 basis points, signaling that the war on inflation is winding down, and the liquidity gates for 2026 are opening. If you've been sitting on cash, waiting for the perfect entry, this is it. We are looking at a classic end-of-year Santa rally setup, leading into a massive January effect. But not every stock will ride this wave. While everyone chases the same overbought megacaps, I've found 3 specific stocks, 1 massive tech recovery play, 1 hidden gem biotech, and 1 dividend fortress that are flashing strong buy signals right now. I've analyzed the balance sheets, the 2026 earnings forecast, and the institutional order flow. Let's get straight into the best stocks to buy right now. First on the list is a tech giant that is primed for a massive 2026, Advanced Micro Devices. Ticker symbol AMD. Here is the thesis. While Nvidia has captured the bulk of the AI hype, AMD has been quietly capturing market share in the data center space with its MI300 series chips. But look at the valuation gap. Recent reports from December 2025 indicate that the sell-off in AI stocks earlier this quarter has brought AMD down to a highly attractive entry point. Morningstar and other analysts have flagged the semiconductor sector as undervalued for the first time in months. With the Fed cutting rates, capital expenditure in tech is expected to reaccelerate. In Q1 2026, we aren't just buying a chip company. We are buying the second best infrastructure play in the world at a discount. The technicals show strong support at current levels. If you want exposure to AI without paying all-time high premiums, AMD is the aggressive growth pick for your portfolio. Now, let's talk about safety and passive income. For the last 2 years, the sector was crushed by high interest rates. But remember what I said in the intro. The Fed just cut rates. Stock number 2 is Realty Income, ticker symbol O, known as the monthly dividend company. Here's the math. As interest rates fall in 2026, the yield on treasury bonds drops. This forces big institutional investors to rotate money back into high-quality rights to find yield. Realty Income is trading at a significant discount to its historical fair value. You are essentially buying real estate assets leased to top-tier clients like Walgreens and 7-Eleven for 85 to 90 cents on the dollar. Lock in the high yield now, before the stock price runs up in January. This is your set it and forget it wealth compounder. Finally, I want to give you a stock that most channels aren't talking about yet. This is for the growth portion of your portfolio. Stock number 3 is Harmony Biosciences, ticker symbol HRMY. In late 2025, analysts gave Harmony an excellent financial health score. They specialize in rare neurological disorders, a niche with high barriers to entry and massive pricing power. Unlike speculative biotechs that burn cash, Harmony has a robust pipeline and strong fundamentals. The biotechnology sector is historically one of the best performers when rates drop, because it lowers the cost of funding for research. Harmony is positioned perfectly to ride this sector rotation. If you are looking for that 40% to 50% upside potential over the next 12 months, this is the one to watch. So, the strategy is simple: AMD for the AI recovery, Realty Income for the interest rate pivot, and Harmony Biosciences for pure growth. The market is moving fast. Don't let the end-of-year volatility scare you out of these positions. Do your own research. This is my personal research and opinion, not financial advice. And hit that subscribe button so you don't miss our 2026 Market Outlook video coming next week. Thanks for watching, and let's make some money.